Hello everyone, and thanks for joining us. In a recent article, we take a look at tax developments in Nigeria and the impact on foreign direct investment. We also take a look at how the government can ensure a balance between chasing tax revenues and providing an enabling environment for foreign investments to thrive. Tax is a key consideration in making investment decisions. Some countries are considered as tax havens because of the favorable tax rates and other tax benefits that are available to potential investors. The Nigerian economy has faced several challenges over the last couple of years, ranging from dwindling oil fortunes to high unemployment rates, high inflation rates, as well as poverty. All of these challenges have contributed to making Nigeria unattractive to foreign direct investment. It's not all bad news, however. Over the last couple of years, we've seen the introduction and implementation of Finance Act 2019 and 2020, which are aimed at aligning Nigeria's tax landscape with global best practices. We've also seen the introduction of CAMA 2020, which is largely aimed at removing some of the administrative bottlenecks that are faced by companies, as well as reducing regulatory and compliance costs. Over the years, Nigeria's tax to GDP ratio has remained at 6%, which is one of the lowest across Africa. This low tax to GDP ratio is caused by, of course, low tax compliance levels, having a narrow tax base, and low taxpayer education. In responding to some of these challenges, we've seen the introduction of the SCP order, which seeks to bring in non-resident companies to the Nigerian tax net, where such companies provide technical, consultancy, professional management services, or where such companies provide digital services. To the extent that they have SCP in Nigeria, they'll be liable to Nigerian tax. FIS has also recently introduced a new digital platform, Tax Pro Max, which is aimed at easing compliance burden on taxpayers. Taxpayers are required to file their tax returns using this new platform. It is expected that this compliance burden and also reduce compliance costs for taxpayers. However, it is important to note that voluntary compliance on the part of taxpayers is key to increasing tax revenue, and the government and tax authorities should focus attention in ensuring voluntary compliance on the part of taxpayers. Some of the specifics include having varying tax rates for companies based on their size, which is determined by turnover. For example, a company with less than 25 million naira turnover is not expected to pay CIT and is not expected to file VAT returns. A company with turnover between 25 million and 100 million is only expected to pay CIT at 20%, while companies with turnover of above 100 million are required to pay CIT at 30%. One of the key incentives is the Pioneer Status Incentive, where companies that are engaged in approved activities or that manufacture pioneer products are given a tax holiday of 3 years, which can be extended for a further 2 years. In those periods, companies are exempted from paying income tax, as the profits made from pioneer activities are exempt from tax. Currently, Nigeria has double tax treaty agreements with about 14 countries. Some of the benefits in having a DTA include reduced tax rates, especially withholding tax on dividends and interest. With respect to tax amnesty, we have seen an effort on the part of tax authorities to introduce amnesty programs in order to encourage voluntary compliance. For example, with the VADES and VOA schemes, taxpayers were encouraged to come forward and self-declare any unpaid taxes or underdeclared income. In reward for that self-declaration, taxpayers were rewarded with a waiver of interest and penalties on all unpaid taxes. Having identified tax as a key contributor to foreign direct investment, it is important to note that tax alone may not be sufficient to address some of the challenges faced by the Nigerian economy. Factors such as political instability and insecurity in the country need to be addressed in order to make Nigeria attractive to foreign direct investors. To read more on our articles, please subscribe to our channel using the button below. Thank you.